Hopefully everyone's doing well. Share the screen. No, my hotkeys have a, I turn them off. And if most of the time, like I don't always turn my keys off or turn my Stream Deck off, but a lot of the times when, and this I haven't fucked up, so I made a mistake today, which was pretty funny. But I guess it gives you guys some insight into the fact that if even if you're almost 2 decades into this, no matter what, you're going to make mistakes. But I normally, when I walk away from the desk, I lock my DOMs. So each DOM has a little lock on the top of it. Make sure that nothing can happen, because she does run over to the desk and start smashing the keys. But yeah, so all right, let's go ahead and share the screen. You guys can see everything nice and clear, right? Good. All right, so this is going to be a Q&A. So as I said, the pod moving forward, we're going to continue with the Q&As. We're going to focus more on streams around execution and live trading streams. This Friday we'll have a live trading stream during the New York Open. So we're not stopping the educational aspect, but we're not going to be going over some more of the bloated, kind of boring educational stuff, right? It's all going to be about iterating all that content and focusing mostly on execution. We're also going to have weekly challenges, weekly exercises, challenges that I give you guys, for those of you that want to participate. I'll figure out some way to reward the people that do exceptionally well on these, or even the people that are making an attempt, and we'll make it sort of gamey and fun, right? This is going to be a Q&A, but what we're going to do first is go over London's long setup, or yesterday's long setup. I know a lot of people got chopped up and took a few swings at that and were stopped out numerous times. So I want to go over this setup because I think it's really important to drive a few things home. And then after that, we will open it up to Q&A, and hopefully we'll finish this in about an hour from now so that I can get to dinner and you guys can get to better things as well. And I'll also cover the mistake that I made earlier, because I think that it's worth pointing these things out when they happen. Obviously, if you're going to lose money in the market, as I've said, you don't want it to be due to forced errors, right? You don't want it to be due to things on your end. You want it to be ultimately due to variance, right? Things that you can't control, right? Something can look perfect. It could be a setup or a set of conditions that you are very proficient in, and things can go wrong just due to randomness and variance, right? This is something that we have to deal with every single day. But making mistakes, forced errors, fat fingers, mistake like I made today, not having a labeled line on the chart and very much acting off of that. So it was an incorrect line. Ended up getting me in a trade that I would have never gotten in this late, but we'll cover that when we get over there, when we get to Sierra. So we're going to be talking about yesterday's, what was one of the entry criteria, or possible, we'll say, ideal trigger scenario for what was more broadly a long bias regardless. So just to kind of, I think it's important to, see sort of set the stage a little bit, right? We had a strong contextual bias higher, okay? We came off of a really strong trend day. We had a gap that we were filling out, so it was clear that the market was taking a breather, but it was just the beginning of one day's balance, right? So we have a strong trend day, and the sign that we're beginning to fall into balance when we accept back within a prior gap of singles, and the market does not show a significant response, does not show any signs of immediate continuation, And instead, it shows signs that it's just going to fill it out, right? When you have a gap like this, when you have an area of singles, you look towards the extremes, right? The thresholds of that for buyers to get re-involved, to get active again and to continue this trend. If you see that you accept into an area of singles, the same idea as accepting into any kind of gap. It's just untested positioning, and the market doesn't spend a whole lot of time sitting at that edge. If it's going to accept, it usually trades back through. And if this was a trend day, it implies that that is an area where value had not established. So there was no real agreement there, no two-way trade. It's a series of stop runs, very aggressive buying activity, liquidations. So when you trade back in there, the market likes to fill these areas out. But the more important detail was that this would be the beginning of the first period of balance, right? If we're seeing this transition, we're looking at day one of balance, okay? Through trading long enough, right? I mean, you could do this pretty quickly by just looking back at the charts. Having been around long enough, though, you realize this. 1 day of balance is rarely sufficient for any kind of reversal. So when I say we are long biased, it's basically that we were eliminating the short side, eliminating any major cause for concern, absent any kind of catalyst. It was unlikely that the market was going to, even if it stopped trending up immediately and filled this gap out, it was unlikely that it was just going to completely reverse, right, and trade much lower, right? So the implications for that would be, or the idea for that would have been, this is one up and then one down. So very unlikely. After strong days, what we've seen is the market has actually spent more time ranging than it has in the past. In the past, you'd get like 2-3 days of, after a strong move. If it's a 1 day move, you're getting at least 2 to 3 days of balance. So this is something that, again, it was one of the reasons why I had said this morning, we look for mean reversion opportunities at the high and the low, right? We're not looking for the market to just continue up in the short term. We're not looking for the market to break down the short term. Yesterday was far more actionable, right? The more you move sideways, the more you build up pressure and make it likely that any further acceptance through extremes is a move that possibly will continue in that direction. So the primary bias, so primary contextual bias, is leaning long, right? Expecting continuation, and continuation at least to the highs, and continuation meaning the move had been up. So ultimately, if we're seeing a move down, we're taking a counter trend move and we're looking at mean reversion, at least back to the midpoint of the range and probably back at the highs, right? It's part of a whole continuation move though, right? Because it's off of a stronger trend day. So this is an overarching bias, and this is a really strong one. I've mentioned this numerous times since the workshop has started, where there have been very similar cases to this. We've had a really strong trend day, and I've said, hey, just don't look for the short, don't look for the reversal. Play for continuation sideways, so play for mean reversion. When things break the lows, when things explore the single prints, look for the long setup, right? You're at least going to be targeting the prior session's highs, right? Or the overnight highs even. So the primary expectation is we're anticipating some kind of return back to the highs, right? Priority was not, we're looking for a reversal immediately, right? So we're trying to keep our bias aligned with context. The London, right? So just to zoom in a little bit more, Asian session, tight, okay? Again, Asian session was the one that filled out most of those singles. So you got a lead on this early, right? Instead of, say, for example, if the Asian session had moved sideways in the end of the USA session's area of value at the high and then just licked the singles and then stayed respecting that, then we might prioritize continuation in the short term. But instead, the pre-market or pre-NYSE open early session filled out this structure. And then London was very balanced, was actually inside value for the most part, inside Asia's value. So you have a bunch of overlap in the pre-market, which makes this a really good, these extremes really good to act upon, okay? We had the anticipation that the London session would be and it's basically, in this case, there's overlap, right? So we could essentially say that our anticipation was that the pre-market lows, right, before the New York session opened, pre-market lows, right, the the electronic session lows, right? Even though crypto's 24 hours, it's not the same, right? We're not, you really hear people talk much about like RTH versus ETH in crypto. But when we're talking about these particular setups, it's useful to frame it that way. But the reality is that both of these were basically the same low, right? You have a poor low, and then you have a relatively poor low. This is the best kind of poor low you can have, where you have one column, but they're even, right? So this stands out. So the anticipation was that this would be these lows, right? Again, that's 109 was what I was saying yesterday, would be the ideal trigger scenario to form a long setup, right? To look for ultimately the mean reversion back towards the highs of the London range, and then back towards the highs of that trend day. And the reason why I'm saying mean reversion is because we're talking about an intraday counter trend move. So it's ultimately getting behind continuation higher, right? But it's mean reversion off of the move down, right? If the move off of the NYSE open is lower, we're looking for a mean reversion setup, okay? Rather than expecting continuation lower. I think everyone kind of understands the use of that. So this would have aligned well, right, as a clean trap and flush of positioning. But there's a reality check, right? So this is going back to, we'll open this up. This is that drive. So this is the initial drive lower. So this is the New York open. Okay, so 9:30, bell opens, bell rings, market opens. And we get the sweep of that level. So you get a nice sweep, but in chat, the one thing I pointed out was we have all the things that line up, right? We have the contextual setup. We have the long bias. We're definitely not looking at a short or breakdown. But what we didn't have was any kind of immediate price action response yet. And we didn't have an imbalance through the level. So one of the reasons that you filter is so you can get that immediate feedback, right? So this is immediate feedback, but this is no immediate feedback. Okay, so there's no dark shading, which would indicate the level of volume and the delta through that level, the level of aggression rather. So you had a sweep though. We ended up trading through the level. You get this is a good 5-minute bar, right? You had a flush of positioning. You have sort of spike of volume that you would want to see. And ultimately you trade back above the level, right? This is 5-10 minutes into that. Okay, it's very rare that you're going to see that the market does things very quickly, right? And zooming in is what we do on the low time frames, but we're getting an overall feel for the interaction at the level still. We're not looking for the one, necessarily just one candle under the level, right? So the first break through the level, which is right here. We're not necessarily looking at the first pin bar that forms under the level. We're looking for development, all right? So over the course of this structure, okay, the market rotated higher, immediately traded back to that low. Again, there's no aggression through it, right? You're seeing imbalances here right now, but it's not significant volume, and it's also relative to the diagonal, that cross section, okay? Which this is a very filtered candle. So you have the sweep of that level. You get a return, and there's still no major pickup in volume, okay? What did stand out, and this is something that I pointed out during, and we were zoomed in, you could use a tick chart or a 1-minute chart going back there. So we'll just let this load for a second. There was the sign initially of a delta divergence at the level. So if we go back to yesterday, this is the move through, and this is the market beginning to diverge, right? So we have a low, a sharp low, a lower low in CVD, right? So things are getting imbalanced, okay, but there's no spike through, right? It ends up holding, so it looks like a higher low is forming, right? On the return, again, the drawing is off of it at this point, but this is your low right here. This is the level that we're monitoring, right? So there's your low, okay? So on the return, we have a delta divergence, but I talk about this often. We need to see that you have a confirmation in price action, right? So this is the return back. The market's able to just cut through that again and underside retest it. I did say this is during this, while this is happening, I'm calling this live. I was saying, I think this might be it, right? to that extent. Someone go look at the chat and see exactly what I said. This looked like it was setting up, right? And again, there were a bunch of other stars that are aligned that says this is going to be a long setup either way, right? This is probably a case where it would have been reasonable to front run any kind of turn. So what a turn would be, or a sign of strength would be, you get the delta divergence, right, at the turn, and then the market is able to, after that, hold the level, right? So here is a low in price. Okay, it's a higher low. This is the low in CVD. It's a lower low, right? Let me get rid of all this. So you have the higher low in price, lower low in CVD, but the level that we're focused on is 109, okay? And even on the low time frames, this is not able to hold the level, right? So what you would want to have seen is that the market is able to stay rebid above that new level, and we're beginning to take back structure after having absorption. Otherwise, I've said numerous times, CVD can be leading. So this level was kind of messy, but like I said, this is the first, this was the first time where it started to look like it was good, and we did have, again, a really strong reason to be biased to the upside. So this was reasonable to be stopped out at, right? I think I shared one of those dumb overlays, and I said, for this setup, because we're targeting ultimately the highs, this is like a 3-to-1 setup or even more than that, and a stop below 108.5 would be reasonable, okay? Market ended up trading back to that level, and it would have been okay to be stopped out below that level. After that, so after we broke down, I'd started to talk about how we started to get the signs of aggression through, right? So you have a low. When you have an important level, right, if we're going to make a case for sellers being in control or being excited, we're just talking about a level breaking and them showing excitement through the level. So this is one of the reasons why it's useful to have these filters, okay? So we started to see that here. We get a ton of aggression through the level. Again, market rotates higher. This is 109 though, right here, right? This is that cluster high. So we went from, so just to kind of play back the tape a little bit, while this is happening, I'm saying that 109 looks good, right? This might be the signs of this starting to turn. And then when we broke down, I talked about this cluster high as being the new point I needed to see buyers reclaim. So for anyone who's not following along yesterday, I talked about this cluster high in detail, right? Again, very clean level that retested after, and again, I'm talking about this after we're down here. And it's me essentially saying this is now the goalpost or the end line that I need to see reclaim, because that's the last area where price had accumulated within a tight range, had rejected, and this is where we're going to look. It's not just going to be 109 now, right? It's not just going to be 109 based on the London session lows. It's going to be based on where that pocket of activity came in, and we need to see that rebid. So what that means is the drawing is here, but I didn't have this shaded well enough. What that means is this is now my area that I need to see flipped. So what I need to see is strength above that area, right? No longer just 109. Let me backtrack these because I don't want to delete. So what's the more recent one? Brush. Okay. So that has become a new level, right? And this is one of the reasons why zooming in and monitoring flows, I think, helps your entry. On the return, it would have looked like, again, if we just went off of 109 again, it would have looked like we had a little bit of time above the level. Mind you, nothing ever really happens there. There's no constructive shift. So if we look at price action on the lowest, very low time frames, right? Even on a 1 minute, if we go to this on a 1 minute, there's no strength above that level, right? There is a slightly higher low, but the market is immediately rolling. What you need to see is that you're continuously taking out highs. So you get aggression through the level initially, and then the market's kind of flat, right? One of the good pieces of feedback is, and as I said, I wouldn't be using this anymore because it seems to be this new XO has a little bit of an issue in terms of the CVD line. This is your cumulative CVD histogram. So this is the first rotation back. That is a good sign of strength, right? So you get buyers lifting this, you get aggression through and back above the level, so back above that London low. But that's never followed up on. It completely dies off, right? So that level is the most important level, okay? You get you have multiple reasons though to look for, right, that for the London setup, right, that is the level, right? The level is shifted because we see this pocket of activity, but you still can have multiple reasons to remain looking for a trigger into the lows, right? It's not necessarily that you need to see that level being reclaimed, right? There is good enough reason. And during this entire setup, by the way, for anyone who's was not following along yesterday, I was longing ETH, right? I was sharing that in the trade channel. So I was expressing an upward bias, but I wasn't using this to this as the instrument. After this high gets put in, you actually get like one of the first significant signs of a shift, right? You get a spike through that low. You get a bunch of volume through that low. The market continues to hold lows at this point. So this high is being respected. Again, there's no major signal here again, right? If we're going off of accepting back within pre-market levels, okay, so market rotates higher, no acceptance through the level. And this is like, there is no like hindsight to this, right? We trade above the level and it looks temporarily like we're holding it, but we're never able to reclaim a high through that. So for example, what I'm talking about would be, here is a pocket of activity through the level. The market immediately stays below that. What you want to see is that you're able to just rebid, right? Very simply, we're able to continuously close through the level. So you get one green close through the level and the market still kind of remains flat there. So it's not magic, but it's also the case that you need to see significant evidence, right? Again, we end up rotating lower and we end up having another strong pocket of selling come in through the low. At this point, the market is holding this level. It's very clear that the market is holding this level, okay? The actual strong move through is this rotation higher, right? So we've now put in a very clear low, right? Again, if you're still just going off of that London setup, right? That is still, this is now your line. So it's like 109.68, right? That cluster high, that pocket of initial activity. The market trades lower. 105 is still holding, okay? We're long biased regardless. We're starting to get what we never had in the beginning, right? So there was no initial, on the initial sweep, there was no real aggression, right? But then at the lows, we're continuously getting aggression through a sweep. So for example, through a sweep, what do I mean? Talking about this, when you put in a rotation lower, does the market, if it trades back through that, so this is the rotation higher that we're looking at now, does the market, when it makes a new low, or it looks like it's going to continue to make lows, does it get excited to sell? And this is an example of that, right? As soon as we're breaking lows, we are, let me get rid of that one because that one's sideways. As soon as we are breaking lows, sellers are getting aggressive again. And a shift in control happens when we're getting aggressive, but then the market is back above that level, right? So this is a really good example right here because this was like an extremely imbalanced candle. And you had that aggression through the lows that was immediately unrewarded. Early in this, again, after this had transpired, and this is live, this is what I was saying. So this is not just the benefit of hindsight, right? After this had formed, excuse me. After this had formed, I had said you have a W bottom, right? You have a W bottom, and this is the level that we need to see price trading through, okay? W bottom, when you have it either like this, which is just a swing, it's a more aggressive entry, excuse me. A W bottom entry is a more conservative entry if you weren't taking the swing failure, right? So this would be the swing failure entry down here. Okay, so if you see this, that's a good entry. If you have a, again, we have a location, so we're looking at getting involved on the long side. We have swept the overnight lows, and then we have something that puts in a low, puts in a clear high, and then on the sweep of that low, on high volume, you've swept out positioning too. You, on that, you have a reclaim. You could at least often target for a scalp that high. So when you're looking at a W setup, from here to here is often something you could take for granted. This is often used as the entry for the larger trade, but the conservative trade is the reclaim of that W, the midpoint of that W. Okay, so everyone following along with that, why that's a conservative entry? Meaning you're looking for, It's conservative because you're requiring a lot more confirmation at that point. You're saying I need to see a buildup of positioning down there, build up and responsive price action over time, and then back through the level. I need to see that reclaim. Does everyone understand that? Why the W top is or the peak, the midpoint of the W? Okay, good. It's just part of a swing failure setup, right? But it's it requires that it's the more meaty portion of that is behind us, right? The more risk is getting involved at the low. But that's why there's more motion there to take advantage of, because people see when a low is broken, they anticipate continuation. That's why we look for aggression through a level, right? We're looking to see, the same could be said if the market trades through highs, right? So this is now the W high. This is technically, but this is the midpoint. So on this return, we were looking to reclaim that. So this point, this is, and during the, in the chat, I was saying we need to see this level reclaim. It's the same level though. It's the same cluster high, so nothing really changed. So all of this can happen below here. And we're looking for the first sign of strength. One thing you never had was any kind of continuation above the highs. So you never had a bar break through the highs. Okay, so this is the first sign that we've had back-to-back bar breaks through the level. This is a more crude price action method, right? Versus getting involved with a swing failure at the lows. But nevertheless, we're at that point convincingly back within the prior overnight sessions. Through the level is exactly what you want to see, right? You want to see that the market gets very aggressive through the level. So meaning, again, we talk about buyers getting excited to break highs, sellers getting excited to break lows, and what it means if they're unrewarded, right? So if you had these highs aggressively bought and then the market is trading back below this level, that is an easier setup to get behind to get short, right? Because we've said, okay, now we've trapped a significant amount of activity there. We have built up positioning behind that. This is a combination of short positioning as well. But instead, what you have is the market is able to continuously close higher and continuously get aggressive through this level. You have, again, there are people that just trade price action, multiple candles that are green, whatever it's called, like maybe it's like 3 white nights or something. Shit that I never consider naming them, at least. But the strength is, doing something that we haven't been able to do yet. So we have a level, right? It's been rejecting us numerous times at this point. What would be a sign that something is different? Well, a sign would be that we're able to continuously close above that level now, meaning these sellers are now no longer there, or they are exhausted. Okay. And remember, this is not in isolation. This is, we're not just looking at a flow setup. We're looking at something that is more likely to return higher based on a variety of factors. So the reality check is that the London setup, right, this would have been reasonable, I think, to get behind. And I only say that because initially the market is coming off of a really strong move, right? Opportunities are often fleeting, right? So any kind of discount is going to be perceived as a fleeting opportunity. There was the beginning signs of a delta divergence here, but we never really had the price action signal. But I could see why, based on that criteria lining up, right, and then hints of absorption, why you would get involved here, right? Again, I was buying ETH at this time, and then being stopped out is completely fine. But to continuously get involved after seeing this, right, that is the level, and then getting stopped out means that you were probably either far too hasty or not patient enough, or a combination of both. Okay, I think you could have reasonably, if you got involved down at these lows, I think it looked a little bit better in terms of from an activity standpoint. So this is the first time, once we started trading down towards 108.5, we started to see things really pick up in terms of the level of aggression. So it just gave you an indication that you're coming into one side of the market that finally started to inspire a significant pickup in activity or create some kind of emotion. Nevertheless, after this W forms, your line, this is very much at this point more of a line in the sand, right? So the market needs to trade above and hold this level and rebid this level. If we zoomed in on this, right, so this is It was, what I say, at that point it was 109.68 or something like that. Okay, so no clear move through the level, and regardless if you're using a tick chart or anything. There's no real acceptance above this level, right? You have one rotation higher and the market immediately fades back below versus back-to-back punches through the level. All right, so the reality check, like I said, is that London did not give the immediate textbook low sweep and reclaim. Okay, this was a bit messier, but it didn't, by no means did this, or should it have, invalidate a long bias. You just needed a better trigger and more, at this point, better feedback, right? Or evidence of better evidence, okay? So it didn't invalidate the long bias. It just meant that specific trigger initially didn't occur, right? And this is based on, we have expectations about how fast things are supposed to happen, right? But this one was a bit messier. Important detail is that when this is happening, okay, this is, again, just more context. We're choppier, possibly because we're going into CPI, right? We're in a conflicting environment, right? But nevertheless, like it's really important that you adapt to conditions. So we can't overly fixate. When we have, there's a few times, and I've said this actually for this particular type of setup, where you've had a really strong trend day, and it just doesn't make sense at all to be biased for any kind of reversal. So we're right away, we're just looking for the long entry. And it might mean that we take a couple smacks at something and miss out, but it should be there for you at some point, unless you're really fucking up. So we can't overly fixate on the ideal, which would have been, again, the first thing we'd think of would be the London sweep, right? We have to kind of default to what is the larger contextual bias, which is just up. Again, this is never, it's not going to always work, but the long bias, right, or the return to the highs bias, wherever that started to come from, was really strong. Wherever we got to see that begin from, was the overarching, like the more dominant feature of this entire setup. Like there was a long setup there, and we had to sort of stick it out and wait for that to materialize. But whether or not that came at the London sweep or below it, I think it was reasonable to get involved initially at the London sweep. But I think to step off of it and get stopped out numerous times was not necessary. Step off of it meaning if you got stopped out, to not get back up when we reclaimed range, at least. Or to just, if you got long, let's say off of this, for example, and this would have been, by the way, this kind of, we're talking about this live, the break like this, so a violent move through, positioning wipe, and then reclaim, I think was good enough, honestly, for anyone to be patient, right? To hold on to this and say, okay, I was stopped out initially here, 1085, this might be the new level, or 1084. I think it was completely reasonable to get long here, right? To get long on a reclaim of, and when I say here, what I mean is here. And then giving this a little wiggle room. And you have to be prepared to be stopped out again, but I think you also have to be patient, all right? Sometimes expectations are the worst thing, because we want to get paid fast, but sometimes fast, it's relative, right? Fast, you did get paid fast, right? Not fast. This took a couple hours, but this from this entry, we're talking, at this point later on in the day, but it was still with the idea in mind that this was going to play out for a series of days, right? Looking at this is misleading, because really we're just still in this one session. So what we're talking about is this to play out over the next 2 to 3 days. So execution priority, bias has to be above. I think a lot of times bias has to be clearly more important than setup, right? The setup, whatever kind of strict rules setup is often a series of rules that we're imposing on a market that is going to be very noisy. That, again, often we could be right about direction but wrong about entry. So you have to remember when you really have a strong bias, right? you have to be willing to be fluid around your setups, right? Especially, should say, in certain cases more than others, okay? So bias over setup. This means that really any credible long trigger that presents during, after, because we're talking pre-market was Asian session, London session, right? They're very tight. Any credible long setup that manifests during the New York session that is offering good risk reward back to the highs is reasonable to take, right? So you have to maintain flexibility while honoring sort of a structural lean, okay? So we're setup aware, but we're led by context. The last thing you want to do is miss like an ideal entry into a trade that we're really confident about, right? Meaning the trade was at this point, whether you're getting involved at 109 or you're getting involved at 105, we're ultimately talking about a trade back, above 110. So a good trade, nevertheless. 1,000-point trade. I think this probably ends up, moving sideways a little longer and taking out these highs. But at this point, I'm not going to place any strong opinions on that because we did have the rotation back to yesterday's high. Even though it wasn't a break, it was a break on Coinbase, but not a break across exchanges. Does this all make sense? Is this clear? Does everyone understand? If there wasn't a cluster, if there wasn't a cluster, we're just talking about where did the market, it doesn't have to be a cluster. It could be just where the last major rejection occurred. Like there often is going to be some kind of obvious level, right? If you're right about your level, which is, again, pre-market lows were in line and this was the beginning of a session that was probably going to be remain balanced period, you shouldn't have trouble defining the level. Pre-market, as a reminder, carved out the what we're talking about is basically back in where this session was, where these singles were. So regardless, this is an area that we'd be focused on. They filled it out already, but it's an area where you expect value to establish. Even if it was like a swing point like this became important, right? It didn't have to be that cluster high. If there was no cluster high here, and we're looking at the London session as being the area to see rebid, and we lose 109, and it was just 109, you still don't have anything. Something would have been. So here is a strong move through, but we do not advance at all. There's no continuation, no advance, right? No sign that this is being rebid. You have, beginning, you might be looking at this and saying, oh, that looks good. It looks like it's absorbing at the level, but you need to see like you're taking out, your buyers need to continuously be able to lift, right? Break highs. So regardless of cluster or not, you have an area that you can clearly see is your area to see a change occur. Just to be clear, the difference between getting involved at the first setup versus at the SFP is the level of aggression, right? aka better evidence. Well, this is like, again, I pointed it out immediately because we were talking about this live and it was, in progress, and there was just, when you break a low that should be significant and you're looking for a mean reversion opportunity, or you're looking for continuation even, right? In this case, the low was the overnight session low. There was no major imbalance through it, right? So there was no big pocket of volume that came in that said, hey, this is taking place on a lot of aggression. Like if we lean against them, the market's going to reverse. It's almost, the way to think of it is almost without any kind of major imbalance. It was relatively spread out though, right? But without any major imbalance at the lows, it's kind of like it's able to do that on not as much effort. So when we're making a case for a trap or a sweep, we want to see that the market gets very imbalanced through there. Now there's high volume through the level, but we have a big candle through it. So you want to see high volume and that things are starting to be tighter. So what a seller wants to see is that every time we break lows, you get aggressive selling through the level, and that the market is able to continuously hold any kind of prior level, right? So this would be, if you're a seller, you want to see that your last lows are continuously holding, and that buyers aren't able to lift this thing back up. And instead, every time that you continue to rotate back there, you have a rejection followed by through another low. You get more excitement and more aggression through the level, which again is filtered for with these settings. And you don't have to have these settings. You could focus on this with the eyeball, but it is useful to have these things stand out. But the swing failure setup is sort of the optimal swing failure setup. You have the first low that was put in on significant aggression. So this is the first sign that the market there's some absorption. And even as prices are flat, it peels off, right? So there is a temporary pause in the selling, and sellers did not continue to get aggressive. So you have a good low right here that starts to form. This looks like a bunch of people got long off of that first sign of absorption, and then we liquidated them on this move. But either way, you have one major low that stands out. The move through gets sellers very excited again, but they're immediately stuffed. So this is a classic swing failure setup. So swing failure setup is just a mouse. You'll hear about this setup referred to as a mousetrap setup, and it's like a very old term. But your mousetrap is just a swing failure. It's just we have a low that's put in on high volume. It's the first sign of absorption. The second attempt to continue lower has another big pickup in selling, but they immediately go underwater. And you've trapped that positioning down there now. When would you have pulled the trigger in the final up move? What point would you confirm that price is accepting above the level? So I think your first bar break was good. So like I said, the one thing that we hadn't had to that point, one sec. The one thing that we hadn't had to that point was any kind of, let's put that cluster back. Although that was already there. I don't know where this line's from again. The one thing that we did not have to this point was any kind of continuation break above. So continuation break above just means buyers are, again, here's the cluster high. Buyers are able to break ground up there. So that's the cluster high. There's nothing, right? It's very clear that this level is doing its job. The second turn to this level, right? Once we establish the swing failure, you get people that are trading these little windows, by the way. So this is a scalper's trade from here to here. You have more pushback, and again, you don't have any evidence of acceptance through the level. Yeah, and this doesn't require too much overthinking. Like even from a price action standpoint, that's the cluster high. This is the highest close we get through the level, and the market can't even take that back. Right, so immediately that level is acting as resistance. Right, sellers are willing to step in here again. The market can't remain bid. So it's okay if you see this red and the market's able to close above that. Right, that'd be a good sign. You get that aggression, the market is able to close above that. Right, green candles closing above that negative delta, sort of like this. So these are strong moves through. We have two back-to-back higher closes. You have this ugly pin bar, but often on low time frames, it's kind of meaningless. Right away, you're able to close right back within that. You never even closed. You never made an attempt back below the prior bar's close. So there's just a lot of volume coming in behind this finally. And then noticeably, like I was just talking about, closing above that volume, even if it's red. This is one example. You're able to close above that. This is another example. You're able to close above that. By this point, you honestly should be in right here. Like after all, again, this is like placing the stiffest requirements back on that London setup when there would have been already meaningful reasons to get involved in the long anyway, right? On this sweep, completely justifiable. It's basic sweep setup in that playbook, right? You have a couple different couple different reasons to enter. Remember, there's always going to be times when you have conditions that line up also with textbook setups. So this is a swing failure setup right here. As this is moving sideways longer, it becomes less important to predict, right? We've had clear levels marked off at this point. This is enough at this point. Like, again, this is not in isolation. Remember, this trade doesn't exist on an island. This trade is already informed by a really strong overarching bias that we're going to return back to the highs. And statistically, it's unlikely. We know that the market is just going to reverse on one day. So we're just looking at a way of expressing that, right? And that's why during this, I'm longing ETH. So would you go market long at the 15 candle, or would you look to place a market limit at the level for a retest? No, I would. Listen, for intraday trades, it's almost always better to look to get long at market. Sometimes you're waiting for a pullback, and if you get a pullback, it implies that the market's able to reverse back on you. It's like what you're looking for is actually that not to be the case, right? If you get filled, you have to wonder if your idea is right. But this all depends on how much size you're trading, right? I would say in the beginning, yeah, try to use limit orders, but you'll see that there's going to be a lot of times when the market is rewarding that side so much, it just doesn't come back. All right. So another, I think, things to go over right now. We had today, I talked about, so let's just open this up. I talked about a mean reversion bias at extremes today. All right, so we had an inside day setup, and what I was talking about in the call was that from here above, any kind of failure at that level or any kind of move through that level, in my opinion, was likely going to be a fade, right? So this is the previous day high. We actually tapped through it on Coinbase, but this is the previous day high on Binance, right? And this is the overnight session high. So overnight session highs, again, something I said I always have on, right? This is a habit from trading indices and CME products. So electronic trading hours versus RTH trading hours. But this is your Asian session high, right? So in that playbook, remember, there are multiple ways to enter into trades, right? Multiple sets of conditions, and one of them is your overnight sweeps, right? So that's all London setup is. Like if you have a London and an Asian session, to oversimplify it, right? It should just be obvious. We're talking about pre-market highs and lows being swept, right? And if we're in more mean reverting conditions, you're biased towards that. Hold on one second. So going back to, well, I'll just use this now because I don't know if I have that set up that way. No, I would be marketing in. I think seeing the rebid is good, right? But I don't think you want to always try to prioritize to look for being involved in that or getting your bid or your entry in that. So this morning, the again, bias was to look for a fade at the highs. So I talked about in the morning call, anticipating mean reversion. This is not a setup I took. I didn't express anything around this, but just to give you an idea of how these ideas work, how these setups work. So again, covering from this morning, contextual bias was no continuation and that we would still mean revert, the same idea as yesterday, but this time at the highs, right? So this is your Asian session high. This is your prior day's high. So anything through this zone is fair game. Now this would have been, again, I said this is misleading because across all platforms, CVDs showed that there was a pull off and there was exhaustion through this level. This one would have been trickier, right? So you have a move through the level. Okay. Market gets aggressive through the level slightly though, but you have a pickup in open interest. But what you have instead of absorption is you have a pull off in overall interest of buyers up here. So the market trades up, right? We get the break of the pre-market highs, in this case, the Asian session high. And then you have sort of this micro SFP. You have a swing failure of the Asian session high, not just a sweep, not a swing failure. But what stands out is that on the second attempt back through the level, so here's your second break, buyers completely pull off. So this is what exhaustion looks like. Exhaustion looks like buyers pressing through a level, but no interest at all. Volume low, delta, more importantly, lower. So your CVD would have been like this. Okay, so this is the other type of CVD divergence, by the way. This is the indication that momentum is drying up and that there is some level of exhaustion. And for this particular case, for this kind of setup, what you're looking at is mean reverting at least back to mid-range. So that's your high, that's your Asian sweep. And mid-range is back around somewhere around yesterday's POC. But like I said, this was like we're front running the extreme of yesterday. This was just an Asian sweep. The better case would be more development up here. This is very touchy. Like there was not really much time to get behind this trade. I'm only switching these because I have the drawings on and it's going to be a pain in the ass to place everything back. But even looking at like a 5-minute time frame, you see there's a complete delta flip right here. So that second move, that second attempt up. And you know, this is a 5-minute time frame. I think live you probably could have gotten away with. So if we're looking at how this, if we're going to say like what might have been a good entry into this, we're going to make a case for that. It probably would have been the range break. So this is the area you're focused. This is your exhaustion, loss of momentum. Because it's not like a prolonged response or a lengthy display, right? Where you could make a more significant case for failure. I think it would have been reasonable to get short after the loss of that cluster, right? This is why I talk about mapping lower time frames out, right? But then you would have been kind of chasing this. I mean, still not in a bad area, right? Ultimately, what we're looking at is the market continuing to trade through prior value. So this setup, just to give you an idea of how much meat is on the bone, even if we said this is our trigger criteria, and if we're trading flow, this is what we're doing. We're seeing things develop. We're seeing a level exhibit some kind of feedback, and then when the level changes and the market shifts, we're jamming into position. Right? This is sometimes what it requires, rather. So this is your pocket that you're focused on. And like I said, this is where the exhaustion happens. I think at this point, it wouldn't have been terrible to get behind this, slamming behind this. And it depends on how this looked live, right? So let's actually play this in real time and see what kind of response we had. We'll replay from here. We'll play this at real speed. So yeah, I mean, you arguably could have had. So once there's no kickback below that level, I think it would have been, meaning once the market trades above below 110.20, sort of as the low that's put in up at this high where that pocket is, I think it wouldn't have been terrible to chase that. My dog is snoring in the background. And then ultimately what we're looking at is the setup, because we're expecting that market is going to range more. The setup looks like this. So you could have been, you honestly could have been, this is a basic Dalton setup too, right? You could have been short from here for this, 1,000-point move. Completely justifiable, but the entry would you had to been more aggressive. So, which divergence is stronger? Because I always thought the absorption one was more analogous to hidden divergence sort of thing. It's hit or miss. I mean, it depends. The best thing is that you want to make sure that these are showing up across all venues. So you don't want to just see one, slight divergence on one exchange. Like this is why I always have Aggro open with all the CVDs, because if I'm going to make a case for any kind of delta divergence, I want it to be, for the most part, unanimous. But when you have location that lines up and you have an overarching bias, remember, this is like the cherry on top that we're looking for. Those perp walls gave me more confidence in the short there today on BTC. Nice, yeah. Yeah, I mean, this whole thing was extremely sticky. So, and as I said in the morning call, this is really, these levels there's a ton of supply up here. And this should be, yeah. So, yeah. All right. Let's see. We're rolling up on an hour. We had Q&A part of this, so that's good. This morning, not this morning, before that error, just to go over what happened. We had just a stupid mistake. We had what looked like was a news-driven move, or someone pre-positioning to the news dropping. So kind of odd selling during lunch. And I say odd because normally the days are barbelled. So the market's closed now. So you could get, you could see what I mean by that. If we get rid of, you look at CVDs, right? Before I close, I'll hide CVD. There's a lot of aggression behind that move. But hold on one sec. Let me blow this up. I'll just make the volume bigger so it stands out. Normally, I don't have my drawing tools now. Can you guys see the? Hold on one second. Can you see the crosshair? You can, right? Just to make sure that it's clear enough. All right. So normally days are barbelled, right? So most of the volume is in the beginning of the session. So you have something that throughout the session drops and then towards the close increases. So like mid-afternoon volume is often like there's some kind of system that's, if there's no catalyst, it's often a system, right? So some large entity either building or offloading a position, or the algo's turned off from the morning and then the market's kind of just left to its own devices. But there was a big pickup in volume this afternoon, which was kind of odd. And this was before the Iran headlines dropped. So we had a really strong move through what was the initial balance of today. And my mistake was, I don't know what line I had. I had a line. It was on 26. So I just had a horizontal line on 26. I don't know why. I don't remember what it was from. It was just left there. But it was unfortunate because, so we had the move through. I was looking at RTH and I was talking about this in chat again. So it's just easy to like piece these things together if you see my comments, and then I go over this now for anyone who was in the chat at the time I was sharing the trades. So we broke through that, and then it's on news, and I'm thinking that we're breaking the initial balance, and I'm looking at, because I had this whole thing blown up. I'm looking at the red line thinking that's, I'm not looking at this anymore. This is all behind, and this is blown up. And I'm looking at the red line thinking black line, black line. I'm just quickly thinking, oh, those are the initial balance extremes. Red line is a midpoint, right? And I don't know how this was scaled that I even thought that, because you could clearly see the midpoint. This is skewed towards the low. Either way, this is the initial balance low, right? So this was the break, and and if it's on news, right, and the market has spent most of its time within range throughout the day, and there's a big pickup in volume, and it doesn't really make necessarily any sense. In this case, the market had from the open put in a lower high. The S&P has been weak today, right? So I'm thinking initial balance break. I'm looking to get short on a retest, right, and trade that back down to the next sticky point. All right, and I'm seeing the market spill, and I'm thinking that we actually already, that we're just breaking that. So I ended up selling this retest, which was good temporarily, but yeah, that didn't work out. I ended up stopping out on acceptance back through the level, but the idea was right. It's just I was late to it. So this would have been the opportune time to get short, right? And just to cover this real quick, and then we'll wrap it up, guys. Don't want to waste your time. Here's a clean range, right? Market has been ranging all day within the initial balance, right? It's as clean as it gets. Putting in a lower high, ranging within initial balance, tight session. I mean, looking at the last couple of sessions, nothing significant today. I mean, today kind of sucked across the board. CPI though, right? And I got long CPI and ended up closing that out. That was a good trade, but for anyone who watched this morning, I want to go over it again, but we had rhythmic errors with Jigsaw, which was a fucking pain in the ass. And they also had computer errors, but all that shit's fixed now, thankfully. But nothing taking place, right? So from a session standpoint, overlap. But the better short would have been failure at the underside of this level. It didn't have to be, we're not looking at, if the market breaks this strong, we're not expecting necessarily that it's going to come back to the level and retest it. This is something that you have to look for the turn at or slightly under the level. So this is your sharp low, and this is your bounce. I think it would have been reasonable to get involved on this loss right here. So you can see the market absorbs right into this level. Didn't look at the footprint right at that time, but I'm sure you had good feedback there. And then this is your moving average that I talk about using on the low time frames. This is us continuing to trade below that. And you can see there's very clear intra-bar divergence, right? Paying attention to delta down here. You're closing strongly towards the lows, and you are green delta-wise. So this is something I would have hammered aggressively, probably on this first turn, right? Not talking about selling that big bar, but right on the turn. And more also because of context. And I think initially it would have made sense to look from, for a scalp like this, right, to look from here, so wherever the turn is, to just testing that low. Like I said, I think 6K would have been a decent place to target as well. But I was, busy thinking that the level was the wrong level anyway. We ended up returning back to the level, and it still worked, but not for much. And I think that covers it, guys. No, we return back to the level here, excuse me. Yeah, this was the return. I'm looking at this. We did it a couple times. This is confusing because it's 1 minute bars. All right, I think that's it, guys. So Q&A, but mostly execution. Hopefully you guys appreciate that. Does anyone have any other questions? So just some thoughts right now on BTC. I think that it's odd that we're creating 2 back-to-back inside days, but at that point, I want to say go with the breakout when you have a Russian doll set up. But I don't know. I think that what's tough is that it's easy initially to say, don't expect the reversal, right? And then, meaning here, so not be short biased here, be long biased yesterday. It was easy to say this morning to look for the mean reversion trade back at the highs. But what we've done is we've just traded still within the structure, right? We took overnight highs. We traded through the highs on, depending on what venue you are. It feels like it should be easy to say the more we move sideways, the more value is established in a very confined area. And when we have a Russian doll setup that has been actionable, that we should be able to just look for a clean break through the level for continuation. But I would just say to still treat these like good trade locations for sweeps, honestly, because the market and this is like just my opinion, right? So if we trade through, 110.5 tomorrow and it's really strong, or if we trade through 108.5 tomorrow and it's really strong, like, all right, I guess get behind it for, maybe targeting 106.5 and then ultimately targeting the 112 level if it's above us. But I don't know, something about the last few times that we've started to range and people have been excited about near-term continuation, the Russian doll setups have not been as actionable. Like we've had, for example, and does everyone remember like the few times this has happened? We've had inside day setups that have they've gone on for like days doing this. Like we've had a breakout and then we just got looser and then we tightened up again. So I don't know. I would just consider maybe that these will be sweepy for a couple more sessions. I wouldn't lean too hard on this being a really tight and continuous, or rather being so tight that it should be more actionable for a continuation setup, meaning because it's an inside day setup. Inside day setups mostly are mean reversion, meaning you look for the break and then back to the mean. But at some point, we expect that we're looking at a balanced break also. So just treat these as the most significant levels on the chart right now, right? Regardless. Yeah. Anyway, this all makes sense? Yes, King answered your question, T. I think the short-term moving average is useful for lower time frame price action to keep you in line with like intraday momentum. It's also a good stop tool as well. All right, guys. So this is recorded. I'm gonna post this. I reposted a YouTube video. I wasn't sure if I doxed anything this morning. I'm doxed, but I don't. There's one time like I shared my IP address, and another time like I feel like I might have shared like I don't know fucking tax information or something. I don't know shit about computers, so I feel like if I show like anything that it's sensitive, but I clipped that out. It was probably nothing. Oh, appreciate the advice, Dirk. All right, guys. Until next time. I'm going to have, I'm going to have some dinner, and then I'll be on later with some thoughts.